It's Billy Turriff here. I'm a full-time property investor and founder of Kensington Finance. In today's blog, I thought I would share with you 6 reasons that I think now is a great time to carry on in investing. First off, we're obviously in a time of quite a lot of uncertainty from kind of a political and governmental perspective, but I think that actually provides us with an opportunity. There's a lot of talk of recession, there's a lot of talk of house prices dropping significantly. My view is that typically when recessions hit us and when house price crashes appear aggressively, we don't know about them. We've known about Brexit now for the last 3 years. I actually see there's been a lot of corrections in different parts of the market already, and I don't think that it's as easy as people are making out to predict when crashes will occur. Whatever the outcome of Brexit is, I think if you look at Europe just now, there's countries within Brexit that work well, and there's countries outside Brexit that work well. Despite the cock-up our government seems to be making, I've kind of got enough faith in the people of the UK, businesses in the UK and organisations that the country will continue to work, will continue to make money, people will continue to buy houses and continue to rent in houses. So really my first reason why I think now it is great to invest is because so many people are saying don't do it and there's a crash coming. I don't believe these things can be predicted, and 99 times when people try and make predictions, they'll get it wrong. Second reason I think is still great to invest is just to look at the actual economics. Our population in the UK is increasing. Each year we have targets to meet for house building, and I don't think for the last 10 years we've actually hit those targets. So the standard supply and demand is still towards a housing shortage. Okay, we will have cycles in the market. It will go up and down as it has done for the last 100 years, and I'm sure it will do for the next 100 years. But the second key point is that the fundamentals of supply and demand are still broken. There's not enough houses for people. So if you're in the position where you can actually invest in an asset class like that, basic economics suggests it's a good idea to do so. Third area is there's been a lot of anti-landlord legislation from existing government and before it. I don't really want to debate the rights and the wrongs of that, and I think time will see how it'll play out and whether even some of it's reversed. But what that has resulted in is a lot of investors, particularly maybe with 1 to 3 properties, are looking to sell out. Also people who've maybe got full-time jobs and are being hit by Section 24 and the impact of they're a higher rate taxpayer. So they're potentially looking to sell out. Also in terms of just where we are in the cycle, there's been a lot of new build city centre apartments built across the UK, similar to 2007, 2008. Lots of buildings converted into 2-bedroom, 1-bedroom apartments. I think that bit of the market is probably getting to saturation point. So a lot of those people who've maybe come into it a bit late or haven't got the returns that they wanted to, and there'll be a bit of a flood of them. So the short point is there's a lot of investors who are now a bit nervous about the market, and that will create an opportunity as they will want to sell and move out of the market. Number 4 is finance is as cheap as it's ever been. Interest rates are still really at a record low. But in addition to that, there is a lot more challenger banks, existing banks competing for investors' funds. So I've seen my rates across my portfolio. I even thought there hadn't been much change to base rates, but by new companies coming into the market, having the opportunity to really get savings from commercial rates of about 5.5% down to anywhere to 3.5 to 4%. Interestingly, just that saving alone almost cancels out the impacts of Section 24. But finance is a key opportunity for people to even do more with less with their existing portfolio. I think number 5 we're on now is that there's lots of micro markets that you can go for. So whether you were looking to do maybe an over 55 development, whether you were looking to do something in terms of kind of a build to rent for a block of apartments, to look at what you can do for permitted development with some of the change of retail use. We've recently bought an office block that we're converting into apartments. Again, you've got to be experienced, you've got to be professional at this. It's not a case of just going to Rightmove, picking a flat or a house that you would want to move in. You've got to look at where the different markets are moving. And we know from permitted development, if you go back to what happened with office to residential, all the prices of offices over time increased. But the people that got in early did very well from that. There's lots of opportunities just now for permitted development, for example, as I said, against change of use above retail, and also in terms of the frontage of shops. You want to look at where some of the rest of the waves may go and read the government's white papers on permitted development and the recent changes that have been made there. The other area, number 6, why I think that now is a good time to buy, is that a lot of residential market buyers who are concerned about what's going to happen with the housing market, who are concerned with what's going to happen with Brexit, their natural reaction is not to buy. And I really think that is a shame for them, because they're probably the most people who are covered by it long term. If you're going to buy a house, you're going to live in it for 5 years, 10 years, 15 years. You really shouldn't be worried about what is happening in the press in a couple of months or 6 months or 12 months. But what that does mean is that, again, for a lot of purchases, as residential buyers go away, the opportunity then opens up for investors. So for those 6 reasons, I really do believe whether you're an investor or whether you're a home buyer, now is a really great time to buy. I'll give you a couple of caveats on that from an investor side. The market has definitely changed. We're definitely operating a lot more micro markets. So you need to do your research. You need to make sure you've got a product that is out there with strong demand. I think you also need to make sure you're buying for a cash flow perspective rather than asset growth. Although I think that if you actually look at the asset growth in 10 years, it may be, particularly, for example, parts of London where they've already had a 20-25% hit, people will actually see this as a golden buying opportunity, as people did in 2010. But certainly any investments I'm doing now, I'm doing on the basis, assuming no capital growth, but I get a satisfactory yield from it and cash flow from it. And I think the third thing, and probably the most important of all of these, is if you're going into it, you've got to accept it's a business. This is not get rich quick. If anything, it's get rich very slowly. I can assure you of that. But you need to be looking at understanding what your legal requirements are as a landlord, understanding that you're creating a product for people to live in, understanding that you've got requirements around your accounts, around your maintenance, and actually going into it as, almost someone who'd be running a hotel. They'd have cash forecasts based on revenue coming in. They'll have refurb budgets set up. They'll have maintenance plans to do. They'll do revenue reviews. Really treat it as a business and be in it for the long term. Hope that was useful for you, and happy investing. Speak to you soon.